Welcome to the big show. This is Investing with Confidence. I am your host, Joshua David, and we are happy to have you with us today. As always, once again, I do have my regular on the program, and he is the one and only Mr. Al Connickson. Al, how the heck are you doing today?
You know what? I am doing really well, feeling good, and looking forward to another great show.
Hey, it's been the frozen tundra and then across America the last few weeks. It hasn't been crazy.
It really has. This has been a brutal week or so that we've gone through. But
the good thing is the markets have been hot.
Yep.
You know, they've been moving. I mean,
they don't care what the weather's like.
Yep. Past few weeks, all-time highs again. We've seen some good down days here and there. But the average investor they're not quite sure what exactly to do. They're buying stock. I mean, that's probably why the market's continuing to go up.
Correct.
But they're not sure what to do with it, whether they should take profits, whether they should hold it for the long term. We're going to talk about some of that stuff here today on Investing with Confidence, sponsored by Online Trading Academy. But with these, I guess, regular retail investors, how do you help people become confident making those decisions? Because a lot of people, like I said, don't know what to do, but you're helping people build the confidence to make better decisions in the markets.
Yeah, and that C word, that confidence word, that is key, because it really shouldn't do anything unless you feel confident in that you know how to do it, which starts with knowing how whatever you're doing functions, and that's what we do. We teach people how the markets function, what makes price change, how you can take advantage of it. But you know what we've been seeing here recently, Josh, is a lot of new players coming into the market. I think I mentioned the stat maybe last week where the individuals making between $35,000 and $75,000 a year have increased their activity by 90%.
Yeah,
we're seeing a lot of younger people coming into the market. With platforms like Robinhood, the stimulus money, a lot of that has found its way into the market. But the problem is with a lot of this, the additional new people in the market and the additional trading. Many of them are just trading on emotion, not disciplined trading or investing. It's emotion, and that's easy to do when you see a market that just continuously goes up. It's easy to get greedy and excited about what's happening. The problem is the market doesn't just go one direction.
Yeah,
so,
and they're making their decisions based off of social media and the internet, which can be fabricated in either way.
Right.
So you have to understand how the markets really function to do that at a consistent basis.
Right. And consistent is the key word there, because a lot of times when something is mentioned on social media, or there's something that is an event that happens, the activity, the impact on price is short-lived, and then it gets back to kind of a more normal valuation. And we've seen some of these stocks that have been, and I think you used the analogy of one of those Super Balls that your son hits, and I used a rocket ship.
I'll tell you what, I got
backyard.
a headache watching that thing go up and down.
Yeah, especially if it comes down on your head.
You're right.
But I mean, we've seen like a couple of stocks that have gone from in the $40-50 range to over $400 back down to $40. That's a huge move based on emotion, and that's not what is going to get you consistent returns. That's not what is going to help you to trade with confidence. So it's time to be cautious. I mean, we're not predicting which way the market's going to go, but a lot of people out there are saying, "Hey, look, I don't know what to do." And you had mentioned this. I don't know what to do because I don't want to miss out if it goes up. But I'm afraid if it goes down, that I don't want to lose.
Yeah.
So how do you overcome that? Well, you overcome it by understanding how to participate in a market that's going one direction, but be protected in case it goes the other direction. It is putting the odds in your favor regardless of which direction the market's going. And if you're trading with emotions right now, if greed is what really is driving your investment decisions, when the market does turn, the driver changes from greed to fear, and then fear starts making those decisions. And those are irrational decisions that typically end up hurting you over time. So now is the time to follow a plan, and that's really key. And I think you need to look at it this way: if you don't have a plan for your finances, somebody else might. And you don't want that to happen, because if they have a plan for your finances, they're setting the rules, they're putting the odds in their favor.
Yeah, well, who's the best steward of your money? It's going to be you.
Sure.
So why have somebody else's, interest in mind?
Right. If somebody else is managing your money and they don't do a good job, at some point in time, are you going to be able to go to them and say, hey, you owe me some money because you didn't do a good job for me? No, obviously not. That's not going to happen. So put a plan together, and the plan should include some rules or components. The number one rule is managing risk. So ask yourself right now, how are you managing risk in your portfolios? How are you protected? So rule number one is manage risk. Rule number two is follow rule number one. What's rule number one? Manage risk. And then the third rule is trade like a pro, because you are either trading like a pro or you're trading like an amateur. In which of those two do you think does better, and which do you think does better on a consistent basis? It's obviously the pros. When we talk about pros, we're talking about, we call it smart money sometimes. It's the big players, the institutions, the banks, the hedge funds, the people that not only understand how the markets function, they make it function. They're the ones that are really controlling the activity in the markets. And so how do you follow what they're doing? Well, fortunately for us, they're leaving footprints in the market. And what I mean by that is on a price chart, we can see what they are going to be doing. And what you need to do, you need to have a solid, reliable trading foundation for your decision making. And if that foundation isn't solid, it's sort of like building a house. If the foundation crumbles, everything above it comes down. The same thing is true in trading. You need to have a solid, reliable foundation that you trade with. And for our students, it's what we call core strategy. That's the foundational strategy.
Yeah, I mean, that's the key thing, is having that foundation, because as Al's talking about, the public is trained, because it's easy to get into the market. You can just put money into the market.
Sure.
But we're trained to just go do that without gaining the knowledge. It takes knowledge and it takes skill. I mean, there's so many people just impulse buying. I mean, that's kind of what I do at the grocery store. I impulse buy all these candy bars. I love these Milky Ways, right?
Exactly why we should not be sent to do the grocery shopping.
Exactly, but that's why you need a plan. And you need a plan, but you have to put the odds in your favor at low risk, high reward, high opportunity investments into the markets. And Al, we're seeing more and more people want to understand more about how to create a plan, how to create that solid foundation in your investment strategy. And you talk more about that and how, Al, coming up next, I kind of want to play a little game. The game is, if I were to put $1,000 on this table, what would happen? And I want to talk about money management, how people are actually doing things, and really, they could probably be doing things themselves. We will be right back.